EM investors have been whipsawed. They've been many, it seems, taken by surprise by what's unfolded, particularly in India and Mexico.
Indeed. I think it's a reminder that, markets are heavily reliant on polls, which have been notoriously wrong, right? And I think it's also important to acknowledge that, while polls they provide a guide heading into election, they're never that reliable. And also, it's important to look at consensus positioning, because I think that really was the case heading into some of these elections, where the currency positions and rates positions were quite consensus to the long side, right? And so I cover credit, and in that respect, we actually see a bit more cushion there, because positioning was not as long, and we're not seeing the same kind of volatility there.
Where have people been re-rotating within the credit space then? If they've been taking and removing risk in some areas, where have they been reallocating?
Yeah, so one election that we've been wrong about as well is India. Right, but actually this has been the bright spot in EM. And part of that is because there is a real story there, there is structural reform, there's growth momentum, but also there's an interesting rotation out of China into India. Right, so if you look at
None of those things change on the back of the fact that Modi now has partners who are, many would deem unreliable partners he's had to sign up with to be able to govern.
Right, but so despite the jitters, our base case still remains that we have policy continuity and that the growth story in India remains intact. Now, there is a very supportive technical aspect to this. So over the years, we've talked about China extensively, and there has been a rotation out of China, and there's a great deal of excess cash due to the fact that we have negative net supply in Asia, and this is primarily driven by the lack of issuance out of China. So that excess cash has to be deployed somewhere. China is still a precarious investment thesis in the eyes of many investors, and so that excess cash now is going to India, and that's the main beneficiary.
Okay, so there's the supply question, the excess cash, the fact that supply isn't coming through from China, that's cash sitting on the sidelines, and it's being redeployed to India, and you think that continues. Switching jurisdictions then, and we'll look back to China, but for now, Latin America, Mexico, and of course the carry trade story there. There's now a risk, at least this is the view of some, that the institutions of Mexico, with the new government who have that majority, those institutions could be undermined by some of their measures. That's the concern amongst some. How do you invest around Mexico given that uncertainty? Right,
so the investment thesis in Mexico for many years has been very strongly tied to the strength of its institutions. Right, so that's been being challenged a little bit by this the idea that a supermajority could undermine checks and balances. So again, going back to consensus trades, the peso was one of the most well-loved currencies and well-owned currencies in EM, and there are structural reasons to have this bullish view in the peso. But I think near term we're seeing this reassessment or this unwinding of a consensus trade. Now, bringing this back to credit markets, so there is this idea that perhaps the undermining of checks and balances could challenge the broader thesis for Mexico. But if you look at some of the issues that are very pertinent to credit investors, actually it might pave a smoother path for the government to provide support for state-owned Pemex, right, which has been a perennial issue for the government.
We talked about China. You talked about China and the fact that, of course, these fund flows still not being pulled into the credit space of China, still too many risks. When you look at some of the policy changes, are you starting to see a momentum now? Real estate stocks are back in a bear market, but in terms of the policy agenda of the government, in terms of supporting the real estate market of China, is there anything that gives you hope, or at least wants to pull you back in, dip your toe back in to Chinese credit?
So I feel like our conversations around China have gotten incrementally more positive, but that's the key word, incremental, right? So I think it is important to acknowledge that this change in policy stance does mark a turnaround to the extent that it is aimed at directly addressing the stockpile issue, right? So that is significant, but implementation is still the key here, and that takes time to see whether there's going to be progress. There are moral hazard issues around project selection, et cetera. So it does take time, but I think it is important to acknowledge that these measures by the government do support the idea that there is a floor on prices here. So there is somewhat of a turnaround, but again, the physical market does take time here. So is it time, is it significant enough for us to see inflows back into China credit? I think it's premature to say that, but there is a floor.